Welcome to Matters Financial and Geopolitical from a Frontier, and thank you for stopping by. I do appreciate it. We've done a little MindSpeak teaser, and I've put that up on Rich Wrap-Ups. If you get a chance to have a look at it, it goes back to 2011, President Museveni. I'm looking forward to being in London this weekend for the Homecoming Revolution, and this is all about the African diaspora, so I'm looking forward to engaging with them, hearing what everyone's thinking. Because it's such an important constituency, and actually my presentation I'm talking about that as well. Home thoughts therefore turn to the Clash, London Calling, which was a hit song which I didn't really like at the time, but now I look back at it, I suppose I much prefer it. And I used to transit through Waterloo Station practically my entire working life in London. And on that note, I put up a link for the Kinks of Waterloo Sunset, which is a very fine song. I went around the banks yesterday, of course. My mother loved Nassim Devji, the CEO of Diamond Trust. And I always remind Nassim of that. And there I am in a serious meeting, and I just want to lean over and give her a hug, but she knows that. I'll put up one of the views back towards the city from her office, and the other views over the game park. And she was excited as anything, as she told me she occasionally sees up to 100 buffalo just outside her window. I'd like to thank John Staley and Dr. James Mwangi of Equity Bank for the time as well, and I thank Tili Bathi and his team at Standard Bank also. 27 days ago, I was 35,000 feet above the sky just outside Nairobi, and I looked out of the window and I took this photograph because it was full of rain clouds. And the storm last night was just biblical and something out of the Old Testament and a little sexy. I started thinking I might be Heathcliff and wanted to break down doors. Political reflections search for Malaysian plane may extend to Indian Ocean. Expanding the search to the Indian Ocean would be consistent with the theory that the Boeing 777 may have detoured to the west about an hour after takeoff from the Malaysian capital Kuala Lumpur en route to Beijing. It is my understanding that based on some new information, that's not necessarily conclusive, but new information, an additional search area may be opened in the Indian Ocean. This is the White House spokesman Jay Carney telling reporters in Washington. Listen to this. Satellites picked up faint electronic pulses from the aircraft after it went missing on Saturday, but the signals gave no information about where the jet was heading and little else about its fate. Two sources close to the investigation said on Thursday. But the pings indicated its maintenance troubleshooting systems were switched on and ready to communicate with satellites, showing the aircraft was at least capable of communicating after losing touch with air traffic controllers. The system transmits such pings about once an hour, according to the sources who said 5 or 6 were heard. However, the pings alone are not proof that the plane was in the air or on the ground, the sources said. Well, it meant it was somewhere, not in the water. That's for sure. And then the other unusual story, of course, has been that some of the relatives were calling and the phones were ringing. Dozens of planes apparently have vanished in the post-World War II era, and I'll put up a Bloomberg visual, and you can see that in that. Putin's Ukraine ambition unimpeded by West as Crimea looms is the Bloomberg's headline. Western leaders are counting on the threat of wide-ranging sanctions to make Vladimir Putin pause for breath after swallowing Crimea. If they can't, the Russian president may opt to move deeper into Ukraine. Putin has yet to blink after sending in Russian troops to seize control of the Crimean Peninsula last month, triggering the worst confrontation since the Cold War. Even as the US and European governments step up their threats of punitive action, pro-Russian protests that are happening in the east of Ukraine, including deadly clashes last night, apparently, give him the pretext for further incursions. I wouldn't rule out a Russian military operation in eastern Ukraine, though it's not on the agenda at the moment, said the head of the Moscow-based Council on Foreign and Defense Policy by phone. If the Ukrainian authorities repress these protests, Russia will respond. And interestingly, under the R2P rule, I suspect, right to protect civilians. Putin has to balance the risk of getting drawn into a protracted standoff and Iran-style isolation with his goal of sabotaging the West's plans to draw Ukraine into its orbit. The next flashpoint is in 2 days, when the majority Russian Crimea region holds a referendum on seceding from Ukraine, a ballot that President Obama and Chancellor Merkel have warned has no international legitimacy. Ukraine's interim government, which took power after the overthrow of Yanukovych, said on March 12 that Russian forces were massing on the country's eastern border. Acting Prime Minister Yatsenyuk warned the same day after meeting Obama in Washington that Putin may move beyond Crimea, even as far as the capital, Kiev. US delivered a dozen F-16 warplanes to Ukraine's neighbor, Poland, this week, and was deploying. That's after deploying 6 F-15s last week to Lithuania. 6 Russian fighter jets and 3 transport planes arrived in Ukraine's northern neighbor Belarus for joint drills, the defense ministry there said. My conclusions are, as they've been for a number of days, that Crimea is a fait accompli. If there is no sign of any capacity to be able to move forward and resolve this issue, there will be a very serious series of steps on Monday in Europe. And here, with respect to the options that are available to us, this is the US Secretary of State, John Kerry. German Chancellor Angela Merkel said Russia is risking massive political and economic damage. I'm not sure about that. And then an interesting article, which I haven't quoted from, but I'll just put the headline as Controlling the Lens, the media war being fought over Ukraine between the Western Bloc and Russia. And that space is a very interesting space, because I think some of the tone in support of Ukraine, of the response, the reaction we've seen in Ukraine lately, the US and in particular, the information wars being waged, I think, in a very partisan way, and it's not entirely persuasive in a very multipolar world, in my opinion. And I think this is something Hillary Clinton picked up on. Nick Terse, who really writes with deep insight about America's military in Africa in particular, has written another piece, American Proxy Wars in Africa. As for the axe being taken to the Pentagon budget, it turns out at worst to be a penknife. I'd agree with that. As Michael Klare recently explained, the pivot is at heart a naval strategy of ensuring ongoing control over the crucial energy sea lanes in the Persian Gulf, the Indian Ocean, the East and South China Seas, through which China is going to have to import staggering amounts of liquid energy in the coming decades. I agree with that. That's my point about the Indian Ocean. Finally, on a planet still impressively heavily garrisoned by Washington, hardly noticed by anyone and rarely written about, the US military has for years been quietly moving into Africa in a distinctly below-the-radar fashion. And the story is called Washington's Back to the Future Military Policies in Africa, America's New Model for Expeditionary Warfare. Lion forward teams, Echo, Casemate, Juniper, Micron. You could be forgiven if this jumble of words looks like nonsense to you. It isn't. It's the language of the US military's simmering African interventions, the patois that goes with a set of missions carried out in countries most Americans couldn't locate on a map. The argot of conflicts now primarily fought by proxies in a former colonial power on a continent that the US military views as a hotbed of instability, and that hawkish pundits increasingly see as a growth area for future armed interventions. Since 9/11, the US military has been making inroads in Africa, building alliances, facilities, a sophisticated logistics network, despite repeated assurances by US Africa Command that military activities on the continent were minuscule. Excuse me. A 2013 investigation by Tom Dispatch exposed surprisingly large and expanding US operations, including recent military involvement with no fewer than 49 of 54 nations on the continent. Washington's goal continues to be building these nations into stable partners with robust, capable militaries, as well as creating regional bulwarks favorable to its strategic interests in Africa. And then in this article, it's very in-depth, lots of interesting analysis, insightful. Do read it if you can have time. It's on Rich Rappap's talking about Libya, the blowback, talking about the intersection between France and the US in matters Africa, and it's extremely interesting and well researched as he is prone to be. And my conclusions were that the US hard power insertion across Africa is simply compelling, and I've been saying that for a while, and it allows the US to tilt the pitch. You know, I wrote about this last year, taking a broader sweep. It is clear that the United States and US African Command has carved out a much more forward position on the African continent. In some respects, Barack Obama's pivot to Asia detours through Africa. China has made a parabolic advance across the continent, and one of the desired side effects of staunching the Al-Qaeda advance is that it also counters the Chinese advance via the insertion of US hard power. The US cannot challenge China's extreme dollar diplomacy, but it can insert hard power with which it can tilt the African pitch. And then I was talking about, you know, the fact that the penny dropped about China's advance relatively recently. I referred to Zbigniew Brzezinski, of course, as an advisor to the president, and I'm sure has played a key role in the Ukraine. But this is what he once said: the three grand imperatives of imperial geostrategy are to prevent collusion, maintain security dependence among the vassals, keep tributaries pliant and protected, and to keep the barbarians from coming together. I concluded by saying I think the interesting point is how Africa has now become front and center of the geopolitical global puzzle, and the collision between US hard power and China's soft power. Then I wrote that article, you remember, on the 19th of August, when I was talking about a sine qua non of President Barack Obama's pivot to Asia is US NATO power projection over the Indian Ocean. Currency markets, the euro has been up and down a little bit, last trading at 138.52. And Draghi said this, I think, which sort of made a few people cut their longs. While the exchange rate isn't a policy target for the ECB, he said in Vienna yesterday, the currency's level is becoming increasingly relevant in our assessment of price stability. Dollar index 79.67, we need to see it above 80 to look at it really. Japanese yen, which I told you I was bullish about 103, is at 101.66. It's set for a 1.6% weekly gain, which is the biggest since the 5 days through January 24. Swiss franc 0.8760, pound 166.14, Aussie 0.9006. Goldman Sachs cut its 12-month forecast for the Aussie to 80 cents from 85 cents, and the 6-month estimate to 82 from 88. So they're expecting quite a fall, heavily correlated to China, and really the news out of China is very soft indeed, and I think it's going to catch a lot of people off guard. India rupee 61.495, the South Korean won 1072.50, the Rial 236.41, Egyptian pound 696.45, and the Rand 1081.74. This week, the MSCI Asia Pacific Index of Shares has declined to 3.7%, biggest decline since May 2012. World Index has fallen 2.2% since March 7. The Aussie is up 0.4% this year, Yen has gained 3.2%, and the Euro has added 0.2%. I'll put up a 3-month chart of the dollar index and just say that for now, unless we see it cross that 80.15 level, I think it continues to trade soft. Euro dollar, bit of a sell-off post Draghi comments, but still bullish, headed to 140. Dollar yen, 101.66. And it's a buy above 103 in my opinion. Gold is at 6-month highs, last trading at 1370.57. It's advanced 14% so far this year. It's headed for a 6th weekly increase, the longest run since August 2011. Crude oil, $97.83. I did say when it was above 100, and it squeezed as high as 105. that was really nosebleed territory, and that tends to happen. You know it's going overshooting, and then it squeezes you even higher. Coffee, that's up a monstrous 86% this year, and you'll see this on the chart. I'm going to put up a 3-month chart. Futures in New York jumped 86% this year. By May, they may reach $3, which would be the highest since 2011. That's another 40%. That's a prediction of an industry consultant in Panama City. Somebody else saying, there's very low price elasticity of demand for coffee. That means, people don't give up drinking coffee if the price goes up. They just tend to drink the same number of coffees. And I can vouch for that. Copper, I'll put up a 1-year chart. That's at a 44-month low, putting a lot of pressure on Zambia, I'm sure. Pakistan's rupee jumped 3.8% this week, which was its biggest 5-day advance since 2000, as a rebound in the nation's foreign reserves won confidence. Rupee led gains among global exchange rates in the past 5 days after Finance Minister Ishaq Dar said on March the 12th that the nation's currency stockpile has climbed to $9.52 billion following international contributions of about $1.5 billion to the Pakistan Development Fund. Currency strengthened amid optimism inflows from a planned global bond offering, an auction of third-generation mobile phone licenses, and an IMF loan will further improve external finances. The rupee advanced 5.5% this month, touched 97.787, the strongest level since June, on March the 12th. It's up 5.9% this year. China's slowdown clouds sub-Saharan Africa outlook. This is an article in the FT, and saying in a world of shrinking liquidity, sub-Saharan African governments are finding little room to maneuver in stimulating their cooling economies, and as investors and ratings agencies take a much harder line on state excesses. And now, however, more clouds on the horizon. China's slowing economy, which is depressing demand for a series of ores, minerals, and other commodities that Africa produces, could weigh more heavily in the months to come. Copper prices have plunged 14% this year, saying that this puts pressure on Zambia, the DRC, talking about platinum, saying although most sub-Saharan African countries have nowhere near the debt levels that triggered the Eurozone crisis, the reduced liquidity in global markets because of the US Federal Reserve's decision to reduce its monthly bond purchases is contributing to a sense of investor caution. And there's some very good charts here. The Ghana Cedi has been the worst performer against the dollar, weakening 8.4%. The Kwacha has fallen 7.4%. Mozambique New Metical down 6.3%. And I'll put up a number of charts. Sub-Saharan African GDP chart, the copper price chart, Sub-Saharan African budget deficits as a percentage of GDP, and Sub-Saharan African current account deficits. My conclusions are this: that the Achilles heel is that Sub-Saharan African governments have expanded their recurrent expenditures, having projected a rising tide of revenues. Single club players like Zambia Copper and those who gorged on recurrent expenditure like Ghana look like a train wreck just waiting to happen. The medium term is bright, but near term we're in very choppy waters, in my opinion. And recall that even the most churlish recognize that China floated a lot of sub-Saharan African boats. We all know what happens when the tide goes out. I did an interview a while back with Reuters addressing exactly this: China's slowdown worries mineral-rich Africa. And I said it's going to hit Africa quite hard, in particular those countries that have got a deep trade relationship with China, and they are not difficult to spot, like Angola and Zambia. Look at the copper. China overtook the US as Africa's largest trading partner in 2009. Trade rose from $10 billion in 2000 to $210 billion last year. The South African oil share was softer yesterday, and it's up 1.9% this year. Dollar versus rand, I'll put up a 3-month chart with no man's land between 10.60 11.40. Egyptian pound, steady as you like, of course, strong support out of Saudi Arabia, Kuwait, and GCC ex-Qatar. The Egyptian stock market has flown this year. It's up 20.08%, and this is a fresh more than 5-year high that it's closed at. The Nigerian Stock Exchange, by contrast, down 6.53%. The drip of bad news coming out of Nigeria, I expect to continue, and I expect that to keep pressure on that index. The Ghana Stock Exchange up 11.7% in 2014, but nearly all of that has been eroded by a plunging cedi. Is Ethiopia ready for fast food and name brand soap? Is an article in Business Week talking about Ethiopia, which is exciting investors, 94 million people, but per capita income of a bit more than $100 per month, and asking, is it ready for Heineken beer and KFC chicken outlets? Heineken is scheduled to open a $127 million brewery in mid-2014. Unilever announced plans this month to open a factory near Addis Ababa. Yum Brands, which owns KFC, is also considering a move into Ethiopia. And lots of people marching in that direction. Known in Portuguese as Palanca Negra Gigante, the animal is found only in Angola, and it is the country's national symbol. Its numbers have plummeted after decades of war and poaching. From the thousands that existed in 1975, fewer than 100 giant sable antelopes are left, according to the International Union for Conservation of Nature. Kenya trotting ahead is the headline in The Economist, and it's a very good article. I'll try and read as much as I can. As the sun goes down over Nairobi, a new rich set of t-shirt wearing Kenyans, most of them black and in their 30s, roar with laughter as they quaff whiskies and smoke giant cigars in the Capital Club, the country's latest temple to Mammon. A year's just down the road here, actually. I haven't taken out a membership because I thought it was very expensive and I couldn't take my kids there. But everyone's said, but I've been there about 20 times. It's getting quite embarrassing. A year's membership, a beautiful waitress proudly purrs, is $1 million shillings, which is about $10,000. Your correspondent watches English football on one of 4 large television screens alongside a wall of faux Maasai shields, while waiting for his would-be host, the spokesman of President Uhuru Kenyatta. Alas, the spokesman fails to turn up. It is a Saturday evening, but the president is apparently too busy to spare. Mr. Kenyatta, one of Kenya's richest oligarchs, who next month will complete his first year in office, is reportedly fond of similar ritzy watering holes. Barely a mile away from the Capital Club, the acrid fumes of charcoal fires in Kibera, a notorious slum, mingle with the stench of sewage running down the muddy alleys where perhaps 800,000 Arabians live in hugger-mugger squalor. The government, says May Echeng, who runs a churchling school there, provides absolutely nothing in the way of services. Manual workers lucky enough to have a job in the metropolis can earn $2 to $3 a day. Domestic and gang violence are rife. Armed police have a station at the entrance of Kibera, but generally keep out of the slum. Visitors are warned to watch out for robbers and flying toilet bags of excrement chucked out of houses at night. Politicians say, says Mrs. Achieng, turn up only at election time if there is a fire or some kind of disaster, saying that these Kenyans exist cheek by jowl, both of them in their way equally dynamic. Half a century after independence from Britain, rich and poor are both locked into a system of patronage and tribe, all competing for advancement, whether for modest jobs in the civil service or for huge bribes to fix contracts for grand infrastructure projects. In the aftermath of a disputed election in 2007, Kibera, whose districts are unofficially divided along tribal lines, was affected as bloodily as anywhere. Very true. One community chopped off the sexual organs of another community, says Mrs. Achieng Luo, whose leader, Raila Odinga, was reckoned by independent observers to have been cheated of victory. Defeated again last year in a fairer, though still flawed poll, he remains the opposition's head. And saying if this system is to hold, several requirements must be met in the years to come. The weather, notoriously variable, must be clement enough to satisfy the more than half of Kenyans who still live on the land. Law and order must continue more or less to prevail, even while the police, in the words of a security analyst, are corrupt from top to bottom. Terrorism, especially a recent wave of it perpetrated by recalcitrant Somalis and sundry Islamist extremists, must be contained. The balance of power, already skewed, must not tilt too far in favour of one tribe, and the economy must grow fast enough to spread the largesse of patronage, leaving enough to trickle down even to the masses in the likes of Kibera. None of this can be assured, and yet polarised and unequal as Kenya is, its progress punctuated by electoral violence and spasms of ethnic tension, the country has for the most part muddled valiantly ahead. Remains the economic political hub of wide East Africa, drawing 250 million people into its orbit. Stock and housing markets are booming, prices in parts of Nairobi rising 7-fold since 2009. The economy grew by 5% last year and is likely to do just as well this year. Countries bidding to become a hub of IT, its M-Pesa mobile telephonic banking system, from which more than half of Kenya's people benefit, has proved a global model. Country has one of the highest rates of Facebook membership in Africa. More than 500,000 Kenyans are on Twitter. Talking about iHub, Google, Microsoft, hopes have been rising that discoveries of oil in remote Turkana County in the northwest may soon be matched by an offshore gas bonanza. Talking about Lapset, the Lamu port and Lamu southern Sudan Ethiopia transport corridor. At last, Kenya is seriously trying to improve its dreadful transport links with help from China. Then saying against this hopeful backdrop, grave worries persist. They're talking about Westgate, gross overreaction by the police against suspected Islamist extremists on the coasts, including extrajudicial killings, has served only to recruit more people to the extremist cause. Several close shaves since December, including a bomb that failed to detonate near the British Airways check-in counter at Nairobi's main airport, ludicrously shrugged off by the Interior Minister as an exploding light bulb. A sharp rise in violent crime, already at epidemic levels. Police are frequently suspected of complicity. Big companies rely on private security firms. He's already done his work. President Kenyatta is considered so rich that he has no need to feather his nest. Mr. Kenyatta has spoken out against corruption. Doctors' own pay by 1/5, but nobody thinks that graft is being seriously tackled. The railway contracts awarded following closed bidding and an extravagant scheme to provide schools with computers are dogged by accusations of graft. Talking about the devolution, saying that the president was woefully distracted by his indictment at the ICC, and talking about how Mr. Kenyatta stirred up Kenyans and fellow African leaders against the ICC, badly damaging relations with allies in Europe and America. If the case fizzles out, they may be repaired. But saying that much of Kenyatta's first year in office has been wasted on this issue. He failed to sack any senior figures in the wake of the Westgate fiasco. Despite his declarations against corruption, he's instigated no investigations over the railway contracts and other dodgy-sounding schemes. Githongo saying Kenya is very polarized. The coalition of the accused, as he mockingly called it, may not last. The Kalenjin will never trust the Kikuyu, says a banker friend of Mr. Kenyatta. Another person saying Boniface, of course, Mwangi was beaten up on a number of occasions, and somebody saying there's a danger we're sliding back to the ways of the Moi era. Nonetheless, in its usual inequitable and patchy manner, Kenya is powering ahead, and saying that the vitality and reach of social media make it impossible for Mr. Kenyatta to acquire the sort of powers Mr. Moi exercised in what was then a one-party state. But he's finding it hard to keep Kenya both dynamic and harmonious. A year into office, he still has to prove that he's the right sort of leader. I think he summed it up just right. Lots of promise, a potential breakout moment, as long as it does not get sacrificed on the altar of the government's recurrent expenditure. And I absolutely agree that the president's very charming, and his manner and an instinctive sense amongst Kenyans that his motives are in the right place have got us here. But like the author, I think the president has to now walk the talk. It is really extraordinary, in my view, that not one official has been fired. It's just peculiar. You begin to look a little helpless when not one fellow gets fired after Westgate and a string of other issues. And therefore, I think the president's got to take some action. Kenya likely to start marketing Eurobond later this month, we all hope. This has been a long time coming. Kenya plans to begin marketing its debut Eurobond at the end of this month. Investor interest in the issue appears strong, the IMF said on Thursday. That's Ragnar Gudmundsson, friend, of course. He's saying that Kenya, the economy is expected to expand 5 to 5.6% this year. That's up from 5.1% in 2013. Saying the rate of growth in credit growth to the private sector is compatible with a pickup in economic activities without creating undue inflationary pressure. And of course, I wrote about this being a big Wembley Stadium moment with the Eurobond, and I said it was imminent in January 2014. I said then I think the government should slot the Eurobond market the full $2 billion that they're after. And then I wrote another piece prior to that when I was talking about credit spreads in particular. The Kenya shilling has been really at this level for quite a while, 86.459. The Nairobi All Share had a strong session yesterday. It's back up 5.74% in 2014 and just 0.193% below a record closing high from the 24th of January. And I spoke about how I thought it would go up on that piece I wrote on the 3rd of March when I said corporate earnings above expectations, NSE Kenya poised higher, and that's turned out to be the case. The NSE 20 plus 0.7%. So far this year. I'm looking forward to being in London and being back here on Monday morning and on my 8th floor redoubt. So I shall go and do that, and thank you for stopping by. I'm always grateful for that.